This is John Paulamy of the Actionable Intelligence Alert. Today is Sunday, July 8th, 2018, and this is my weekly update on the markets. In addition, at the end of the update, I will answer some viewer questions that have came in recently. So, first of all, this week there was a pretty interesting article in Bloomberg that talked about the potential for a spike in oil prices. Now, this was based on a report put out by Bernstein and Company, and in their report, the analysts had determined that, yes, oil production is an extractive industry, and there's been a lack of investment over the last few years due to the low oil price. And that may lead to less supply in the future. Well, I'm glad that the analysts on Wall Street, with all of their MBAs and all of their PhDs, have finally figured out what all of us out here living in the real world already knew. But it's good. I think to review, the collapse in oil prices several years ago has led to years and years now of underinvestment in new reserves and new production. And as we've said before, oil is an extractive industry, and if you don't invest to find new reserves, your production and your business viability as an oil company is at some point going to be a problem. We talk about the ongoing dragon that needs to be fed, known as depletion, and we've also talked about the fact of demand that's coming from the emerging markets. So the other point in the article was, because of the poor performance of a lot of these oil companies of wasting shareholder money, shareholders have told the oil company managements to focus on boosting returns and shareholder distributions via buybacks and dividends at the expense of capital expenditures. So here's another quote from the article: reserves at major producers to fall and the industry's reinvestment ratio to plunge to the lowest in a generation. A generation, if you want to look at it in biblical terms, being about 25 years. Paving the way for oil prices to surpass records reached last decade. The other quote here that I found interesting: the oversupply of crude globally in recent years has masked current underinvestment, and we have charts to illustrate this. But long story short, it's the same story that we've been talking about for months now since I've been making these videos, and it's also why the oil prices literally doubled over the last year or so. I'm not sure that we're going to exceed the prices in the last oil spike. That was 140 some odd dollars a barrel. The economies in the world right now, especially in the West, the United States and Western Europe, they're very fragile. I'm not sure that they could withstand $150 a barrel oil for very long. But I do think we're going to see over $100 a barrel oil. I do think that that's going to lead to higher cash flows. I do think that oil company executives are going to move to start investing in new production and new reserve growth. So this is just a chart that I've shown before in previous presentations. It just shows the reserve replacement ratio over the last few years, and you can see that this mostly pertains to offshore oil, but you can see that since about 2013 you've been pumping more oil than you've been finding, and in fact last year you only found 1/3. You've only replaced 1/3 of the production that we as an industry have produced offshore. That is not a long-term tenable situation. If you continue to do that, you will eventually go out of business. I don't think that's going to happen. I've shown this chart before also. Tightwad Oil Titans. These are some of the biggest oil companies. You can see that since 2014, 15, 16, and 17, the cumulative, with just these oil majors, the cumulative capital spending has been cut in half. That also is not tenable. So that's going to result in a higher oil price. That's going to result in higher cash flows. the companies then are going to begin a new investment cycle that will trickle down into oil services. That's where we're playing, down there in the offshore oil drillers and various other oil field services companies that still have not responded to the oil price increase that we've seen. So the other big news for this week that I thought was big news, at least, was the Yellow Cake IPO. Yellow Cake fund, basically based in Great Britain, raising $200 million, $180 million to $200 million to buy about 8 to 9 million pounds of uranium directly from the state nuclear fuel supplier Kazatomprom in Kazakhstan. So what I thought was interesting about this is that the issue was oversubscribed. That means there was more demand than for the shares that were available, and they did issue some additional shares, which will also result in additional uranium purchases. I go back to the second quote here, what the CEO said: due to an exceptional set of circumstances, uranium is one of the few commodities yet to recover from the recent commodity bear market. And we believe that uranium is currently fundamentally and structurally mispriced. I think this is the best, if you wanted 2 or 3 sentences or one sentence to describe the investment thesis, the so-called elevator pitch, if you were riding an elevator with a big money manager, I think this statement kind of sums up the bullish thesis, if you will. I mean, obviously you can flesh out what the exceptional set of circumstances are. We know what those are. I believe that the immediate stoppage of all Japan's nuclear facilities right after Fukushima interrupted the typical supply-demand balancing act that was in place in the uranium supply. It caused this artificial low price for the last 5, 6, 7 years and has placed the industry in liquidation. No new uranium mining coming online, yet demand increasing. So that's about the quick and dirty. We've talked about that ad infinitum. But I do think that this is just going to be the first of many or several private equity deals, investment funds, whatever you want to call it, where money, big money, people are seen, you know, with record overextended stock markets and bond markets around the world, with liquidity that has basically created a everything bubble. I believe that uranium is one of the few areas that is currently extremely undervalued, and I think that's why it's attracting this investment / speculative capital. We should expect to see that to continue. Another article that really wasn't too publicized, or people didn't really say too much about, was the Japanese came out with their target energy mix. You know, countries don't just, at least serious countries, don't just leave it, their energy plans or what they're going to do to chance. And Japan, there's an article here, you can check it out, but the Japanese have basically recommitted themselves to 20 to 20%, 22% of their energy mix to be nuclear. In fact, there was another article which I mentioned in last week's video. TEPCO has said that they're ready to start recommencing construction on nuclear projects that have been put on hold. So people might wonder, well, why after a disaster like Fukushima would the Japanese continue to use nuclear power? Well, the answer is very simple. I lived in Japan for 3 years. A cursory Google search should be able to answer this question for most people. Japan is basically a series of rocky islands in the Pacific Ocean. The country virtually has 0 raw materials. I mean, if you go back and look at the reasons behind World War II and what Japan was doing when it had invaded Korea and Manchuria, Southeast Asia and Indonesia, and current Indonesia at the time was the Dutch Indies, the quest and thirst for resources was the impetus for their imperialism, shall we say. So obviously in the modern times now, where people can't just use gunboat diplomacy, they have to import all of their fuel, and it's a modern industrial society. We've talked about this before. People do not want to live like hobbits, scratching a living out of the dirt and reading by candlelight. People like refrigeration. They don't like to eat hardtack and salted fish. That's medieval type living. So in order to accomplish that, we've developed things like 99.9% available electricity, which has changed people's lives. So in order to have that, it creates a tremendous amount of demand for fuels that simply cannot be accomplished with solar panels and windmills. So in order to have a modern industrial society, one needs baseload power. Like I've said before, your choices there are coal, natural gas, or nuclear. That's why the Japanese are doing. Japanese are doing what they're doing because they have to do it. The people in the West continue to live in fantasy land, thinking that virtue signaling about plastic bags at the grocery store and solar panels on their house. In fact, like I've said before, the amount of terawatts and quadrillions of BTUs that are required in an average year to power an industrial society require baseload power. So you're only going to get it thermally from nuclear or coal or natural gas. But I thought that was interesting. It really wasn't talked about a lot. But even if the Japanese, who went through the whole Fukushima disaster, if you will, have said they have to recommit to nuclear just because it's a necessity, then that should tell you something about nuclear power when you're reading articles by detractors saying that it's going away. It's not. So let's get into some Q&A from some of the viewers. I like when people ask questions. I've said before, I really can't, I'm not going to get into people leave comments about individual companies. What do I think about company XYZ? I really can't get into that. The one comment I will make about this question exception is because it illustrates an issue that I have talked about in the past. So the first question is, what do you think of UEC? Do you think it could go up 20-fold like Cameco? Well, first of all, I don't think Cameco, I have no idea if it's going to go up 20-fold. I have no idea what's going to happen in the uranium market. Anybody that does is lying. I think that we have a set of circumstances which leads one to believe that the risk-reward ratio is favorable to the upside. I can speculate what I think is going to happen based on history, but history never really repeats exactly the same way. So what do I think of UEC? Well, I think Amir Adnani is a pretty smart guy. I've met him before at investment conferences. He knows how to talk. He's a promoter. He's not an engineer. He's not a fuels guy. He's a promoter, and he's very good at promoting. The problem with UEC and a lot of other of these uranium companies is they do not produce any uranium. Therefore, they have no revenue. Therefore, they have no way to keep the lights on except for to issue shares. Okay, it requires cash to keep mines in care and maintenance. That's what they have. Their ISR mines in South Texas are on care and maintenance. That costs money. If you want to do exploration like other utility or other nuclear uranium companies, it costs money. If you have no revenue, you have to issue shares. So recently, UEC, about a month ago, came out with an update, and in the update they said they had to issue a going concern notice. Going concern notice means if we don't get more money, we're not going to be a going concern anymore. Let me break that down in non-generally accepted accounting terms. If we don't get more money, we're going out of business. Now, I don't think UEC is going out of business. Amir Adnani is out there right now, I'm sure, talking to people about doing a private placement and getting some cash. But this kind of illustrates, guys, what I've been talking about. You have to know what you own. You have to look at the cash balances. You have to be listening to what these managements say. I mean, I think a month ago, Bannerman Resources, this is a company that I'm interested in. They're an Australia-based company. They have properties in Namibia. They have no production. They're developing a resource. They just recently had to do a private placement and raise more capital. This is what's going to continue to happen until the uranium price goes up. And I have no idea when the uranium price is going to go up. Either does anybody else. We can speculate. We can try to research and come up with reasonable ideas, but no one in fact knows when the uranium price is going to respond to the supply-demand dynamic. So, as I've said before in previous videos, you really have to know what you own. You really have to deep dive this. Don't just listen to gurus. I mean, I can make this video, I can pump it up, I can make this be like some of these other people do on the internet and tell you it's rainbows and Skittles all the way. But it's not. This is serious business. This is speculation, and most people are not successful speculators because they don't understand these things. Most of these uranium exploration companies are burning matches. Okay, if you don't know what I mean, go light a match and hold it between your two fingers, and you will understand what I'm talking about. Okay, they have a limited amount of life based on the fact that they have to hype up the stock and hype up the story so they can do private placements to get cash to keep the lights on. Not only keep the lights on, but do their development, drill out their properties, and hope they can either develop a mine or sell it to someone else. Well, that's not going to happen at $22 a pound uranium. And that's where we're at right now. So more shares are going to be issued. You have to know what you own. You have to understand. You have to make assessments of whether or not the dilution is small enough that the amount of pounds that are found are going to overwhelm that dilution, and eventually, when the uranium price takes off, you're going to be able to make a decent profit. So let's go into the next question. So another viewer wrote in, he says, I agree that uranium will be an excellent investment going forward to the growth factors mentioned in the video. I am having some heartburn regarding the present oversupply of above ground inventory that currently exists. Please refer to this article that stipulates current above ground inventory sits at 1.79 billion pounds, which equates to roughly 10-year supply. Okay, then he lists an article that I've put on here to the World Nuclear News, which is an excellent website, by the way, and talks about cautious optimism for uranium outlook. So I read the article, and so this is another example that you really have to understand the market. You really have to understand this industry. You have to do some research. So if you just read this, you say, well, that's right. I mean, the demand's about 180 million pounds a year. So if there's 179 billion pounds of above ground inventory, my God, that's 10 years of above ground inventory. How are you guys thinking the uranium price is going to go up? Well, let's look at this. The fabrication cycle, the fuel cycle for a nuclear reactor, which is the end use of 99% of the uranium that is mined, is a 2 to 3 year cycle. The actual mining of the uranium in the mine in Canada at Athabasca, let's say, until it enters the reactor and is actually being used up as a fuel during a chain reaction, is 2 to 3 years. Okay? So of course there's going to be at different points in the cycle, fabrication cycle and processing cycle, a certain amount of above ground inventory because it's in process. Okay, let's go back and talk about this again. When you build a 1,000 or 1,200 megawatt nuclear power plant, modern nuclear power plant, you're talking about a $5 to $7 to $10 billion investment. Okay, let me say that again. It could be anywhere, depending on where you're building it and what technology you're using. It could be $3, $5 to $10 billion. Once you build that, you need it to run all the time, except for maintenance outages and refueling outages. Let me say that again. It has to run all the time. Okay, so if you're the nuclear fuel buyer for Duke Energy or Southern Company or whoever that has nuclear reactors, you're not just sitting there going, well, our uranium inventory is running down. I better go out there and make a deal with Amir Adnani at UEC. That's not how it's done, guys. These guys they know when the outages are going to happen. They know when the refueling is going to happen at the power plant. And they're out there 1, 3, 5, 10-year, 20-year plan, life of the plant, okay? And no one who has that type of dollar investment is just going to run a just-in-time inventory for their fuel cycle. So that's where a large majority of the above ground inventory is held, just in fabrication and going through the pig going through the python, if you will, of mining, processing, and fabrication. Not only that, no one is going to get caught out by not having some inventory they're holding in case something bad happens. Wars, earthquakes, God only knows, political upheaval, whatever. So there's a certain amount of inventory being held by the various utilities just to compensate for that. The Chinese are famous for this. They stock, if they're going to build nuclear power plants from here to kingdom come, they're going to be in there stockpiling a lot of uranium for future use. They do not want to get caught out, especially when they understand they play a long game and they know there's going to be political conflict and economic conflict around the world going forward. You know, they're not going to, try to build out their nuclear fleet to 15, 20, 25% of their base load capacity and not have inventory. So that accounts for inventory. Various other governments have inventories, okay? Various trading houses, various, whatever. So the CEO of Bannerman Resources, Brandon Munro, I think his name is, Braden, I can't remember. Anyways, here's an article you can go to. He talks about this and he goes into depth. Yes, he admits that there was, even when Fukushima happened, there was an oversupply situation, and that was a result of uranium prices going to, $140 a pound back in 2007, 2008 range, and utilities were scrambling to buy. So everybody was out there buying, and the price was high because people were getting nervous. So yes, there is some inventory in excess of need, but it's only really about a year, according to the CEO of Bannerman Resources. Now, of course, hey, he may be talking his book. No one really knows the exact amount. There's guys like Michael Alkin that, I know he's got like a 30 or 40, 50-page spreadsheet where he tracks every reactor, every mine, but it's not going to be dead nuts on. And even if you read the article that this viewer sent in, where it was causing him some consternation, it was a conference and UXC was there. That's the, kind of the IEA or EIA of the nuclear industry. I mean, they were just saying a lot of this is estimates. No one can know for sure what the exact inventories are or what different governments are holding or different utilities are holding. You can gauge it, you can guess at it, but it goes back to what I've said before. The average cost for mining a pound of uranium is $50 to $60 a pound. It's selling right now in the spot market for 22 and change. That math doesn't work. Okay, so every day that goes by, more and more, pounds are being ate up in those reactors that are operating. Okay, and at some point, if the price does not go up and we still have demand climbing, there's going to be an intersection where price then takes off. And see, this is what separates actually the novices, the punters, the bleacher bums from professional investors and speculators. And I'm not trying to offend anyone, guys, but this is the point I'm trying to get across from you. This could take a couple years. But if you're going to double, triple, quadruple, or have your money go up 10 times, which is what the expectation is, if you have to wait 3 years for that, are you willing to do that? Because you can't know the exact timing. All you can know is that all of the information and facts we have indicate that's where we're going. So that's why I talk about patience. That's why I talk about being right and sitting tight, as Jesse Livermore said. Most people cannot do it. So there's this constant hand-wringing and consternation, and people are so thirsty for any tidbit of information that's going to indicate that the uranium market is turning and that the price is starting higher. I don't care. I don't care about it, okay? It's going to happen eventually. Just be patient. That's what separates people that are successful in these markets from people that aren't successful. I mean, where else are you going to go? You're going to go buy Amazon at 200 times earnings at $1,700 a share, or Netflix, or Tesla? So this is an undervalued situation. The facts have been laid out. Just everybody needs to calm down and understand where we're going. Now, that kind of segues into my warnings that I said before when I was talking about these juniors and UEC and some of these other juniors. We don't know how long it's going to take. So you got to know what you own. You got to know how much cash they have. You got to know what kind of properties they got. And are the pounds in the ground, are you buying pounds on the ground cheap enough that even if they have to dilute to keep the lights on, you're still going to get a payoff? And that kind of segues into some advice I'm going to give. You can take it the way you want to. Most people that are investing, or let's call it speculating, because we're not investing here. We're speculating that the price is going to go up based on the supply-demand dynamic. I mean, I'm going to just go out and say it. Most people should just be buying physical uranium via the Uranium Participation Fund or the new Yellow Cake Fund. That's what they should be doing. You should just be buying it and stacking it. That's what I used to do when I was buying gold and silver when it was undervalued in the late 1990s. You know, I wasn't out there buying mining shares. I was every day, every paycheck, I would go into the local coin dealer and buy more silver rounds at $4.25 a piece. Or, you know, I was buying, you know, gold eagles at $285. Okay, that's what you should be doing in uranium. Now, why am I saying that? Because you want to have, you got to have your money into something, and we're overvalued everywhere else. Buying physical uranium, you're buying something that's eventually going to be used. It's eventually going to be used in a reactor. The supply-demand dynamic is going to turn in our favor eventually. Why not just buy the physical? Okay, now you've got your money in something that it's really probably not going to go down unless we have another nuclear accident, but yet you could still get some price appreciation, and then you just wait for it to break out. Let's wait for uranium to get to $27, $28, $30 a pound. Then you can shift from your holdings of physical uranium and then in some of the juniors, or when we have an established trend in place. It's like Bill Fleckenstein used to say. He's a famous short seller. I like to use some of these analogies of these famous people. You know, during this last bull market we've had in the regular stock market over the last 10 years, he had a short fund. He was a short seller. So, you know, he shut his fund down because it's very difficult when the markets are moving higher every year after year after year based on central bank liquidity to find good short candidates. And he shut his fund down. I heard him say in a recent interview he was thinking about reopening it, and he said, you know what, I'm just going to wait until this thing kind of rolls over. He's talking about the general market, and it's obvious that he said it's a lot easier to come in and shoot these things in the back. And it's kind of that analogy he was using about, you know, the Indians on the plains and the settlers. You know, you don't have to go running into a line of rifle fire and get run over. You can just after this thing rolls over and they're already under stress, then you can come in and shoot them in the back. And it's kind of the same thing with this uranium deal. I mean, you're dealing with mostly junior companies, like I've said, with no revenue, having to raise money all the time, not really sure when this thing's going to turn. So if you want to be in the uranium market, just buy, like I said, Uranium Participation Fund. It's at about a 5 or 6% premium. That's typically what you would pay if you're buying coins, gold coins. You'd be paying a 3 to 5% premium. It's the same thing. You pay the premium. The shares are liquid. They represent actual physical uranium, UF6, and hexafluoride in storage. Denison administers the storage for the fund, or the Yellow Cake Fund, and they're storing their uranium at Port Hope under Cameco's supervision. So that may be the best thing for most people to do. That will relieve, I think, a lot of the angst, a lot of the hand-wringing. That would be my advice. I own physical uranium. I'm going to be buying more. I'm hesitant to put additional money in a lot of these juniors when they're just going to have to raise more money, and really we haven't really seen a turn in the price. We've seen some stabilization. It's crept up a little bit from the lows of $18 a pound about 9 to 12 months ago, but we haven't had this big run yet. So it may be, if you want to be in this market, you just buy the physical, you watch it, you have your list of juniors that you're interested in, you follow the news, and then when this thing breaks out, you jump in. Now you're going to miss the initial blast off, of course. That's what's going to happen, but you know, it's going to be a multi-year run once it gets going. So that's kind of my answer to those questions. I hope that you know, you should participate in this if you understand the supply-demand dynamic, but you shouldn't be doing it to the point where you're losing sleep, and, you know, eating Tums and drinking Maalox because you're worried all the time what's going to happen. So the best thing to do may just be to buy the physical uranium. So that's it for this week, guys. I will continue to answer questions. If you put questions in, I'll put it in here as part of my market update. I like talking about this stuff and trying to help folks out. I'm not saying I have all the answers. These are just my opinions. I think that they're thought out. I like to take long walks in the woods over here, and I think about these things, and then I just come back and tell you guys what I think. So feel free to challenge my ideas or my views. That's how we get to better conclusions and better have a better outcome for us all. So appreciate you guys listening, and we'll talk to you next week. Thanks.